I'm Ben with the BTC Sessions, and this is your Bullish Bit, brought to you by Voltage, offering enterprise-grade infrastructure services for Bitcoin like hosted nodes, BTC Pay Server, and inbound liquidity. You can check them out now at voltage.cloud.
You're just seeing that this is a house of cards, which is something we've beaten the door down on in the Bitcoin community. But the way I explain this, and I was explaining this to someone at the firehouse this last week, like what's going on in the economy through the way I view it. And it's this, it's that when the Fed suggests they're going to do the things that they're suggesting, they are not moving the market back to reality, but they are moving the market closer to reality, right? So when you think about what's gone on, right, we have exorbitant amounts of artificial liquidity, right, through quantitative easing and fiscal deficits on fiscal deficits. We have a cost of capital that is incredibly artificial, right? Interest rates manipulated down to lows that they wouldn't if the free market had reign, right? So when they signal that they're going to raise rates and pull liquidity or cut the spigot on liquidity, that moves us closer to reality, and it exposes the artificiality in the system, right? So for people that aren't all that financially minded, you've been staring at your retirement accounts and investments through COVID, wondering how in the fuck are these things at all-time highs in the middle of one of the biggest economic crises of the last 100 years. It's all of this artificiality. And even one tiny incremental move closer to reality causes markets to have a conniption fit. That's not cool. That's not fun for humanity. It's not something I celebrate, but it is bullish on the alternative to this incredibly fragile, over-leveraged system. And in my humble opinion, that is Bitcoin.